Hi, thank you for taking the time on such a good weather and decide to join us to see the view with everybody here to learn about fintech. So this is actually the second panel co-organized by HKUST Business School and Fintech Association of Hong Kong. So I'm Veronica. I'm the board member of Fintech Association. I'm also alumna for HKUST Business School, graduates from in marketing a while back. So I'm very glad that we again make this FinTech panel happen. And this time we're talking about the strengths and opportunities of FinTech in Greater Bay. So Greater Bay has been a very hot topic. How we look at one of our gateway to China is technology evolution and a lot of FinTech opportunities in Greater Bay. So we'll spend a little bit of time today to explore on that one. And on top of that, actually, since fintech is such a hot topic in Hong Kong, in Greater Bay, in the region, so the school also have a new Master of Science in Technology program that we launched in 2019. So it's one of the great initiatives that it happens that the Fintech Association of Hong Kong can help to promote fintech education. So a brief introduction of Fintech Association of Hong Kong, FTAHK. We are a non-profit organization focusing on advocacy, collaboration, and education of fintech and building an ecosystem in Hong Kong. So very glad to hear today we have another panel focused on education, connecting to HKUST alumni and business practitioners. So I pass the floor to our honorable guest today to start the panel with us. So may I introduce our moderator and panelists? So today we have Professor Hui Kai Long to be our moderator. Professor Hui is the chair, professor and deputy head in the Department of Information Systems, and Business Statistics and Operations Management at HKUST. So he's also the co-director of the dual degree program in technology and management and the co-director of the Master of Science program in financial technology. Yeah. And then we have our three honorable speakers, Jonathan Cheung, HKUST Business alumnus, is the Director of Strategic Partnership of Novo Credit, a cutting-edge fintech and credit technology company aiming to address challenges of cross-boundary financial inclusion for over 10 million of MSMEs and 70 million individuals across Guangdong, Hong Kong, Macau, Greater Bay Area. Welcome, Jonathan. And we also have two panelists from our Greater Bay Committee of Fintech Association of Hong Kong. William Genovese is the Vice President, Corporate Strategy, Financial Services at Huawei. And Hayden is a technology lawyer with DLA Piper Hong Kong with a particular focus on fintech. So both of them were chairing our Greater Bay Committee, and therefore very glad to have all of our panelists today to talk about the fintech in Greater Bay with all of us today. Welcome.
Okay, thank you very much, Veronica, and I'm going to moderate this panel. So let me suggest the format to be the following. So we have, as you see, three distinguished panelists in this panel. And I think William has come prepared to share something related to what Huawei has been doing, especially in the current landscape, and they have some mapping report related to the development of fintech in the Greater Bay Area. So I would suggest we start from William, who will be able to share the latest findings and also give us an overview of the landscape of the market today in Greater Bay Area. And then afterwards, I would suggest we go to Jonathan, who will be able to talk to us about the issues involved in assessing credit data, which obviously is something that concerns about every one of us today. Especially, I'm guessing most of you will be affected recently because of some data breach issue that occurred in Hong Kong. I was certainly affected by some of our beloved companies here. And I would suggest Hayden to be the last speaker, sharing with us the legal perspective, the challenges that we are going to face when we work on the Greater Bay Area related to the development of fintech. And afterwards, we'll open the floor for some discussion. All right, so how about you start, William?
Thank you very much for the introduction, Professor. I work at Huawei in corporate strategy planning, and I head up our global financial services strategy development. And the Greater Bay is a very, very important part of that. We have 2 or 3 very key anchor clients here in terms of banking, HSBC and Standard Chartered, that we're working with. And my other role, evenings, weekends, blending into my day job at Huawei, is being a co-chair on the Greater Bay Committee, which is our newest committee in the association. We are working on a market analysis mapping report, because one of the first challenges we're conquering is, what is the Greater Bay? You know, how does anybody define really what that is? I mean, the China government defines the Pearl River Delta as 12 to 14 cities, okay? But in our discussions and with the association, we're identifying, of those 12 or 14 cities, where's the investment, where's the research, where's the community interest, okay, in terms of fintech, and where are those overlapping solutions, and we will highlight those in our market research report. So for example, the MAS, Hong Kong Monetary Authority Trade Finance Platform, that's based on blockchain. Very key highlighted solution that we want to bring out, okay, for the community. I'm very excited to be part of this community and this effort and committee, because from a differentiation standpoint, there's nowhere else in the world with the opportunities that we have. So Veronica said our slogan is ACE, Advocate, Collaborate, and Educate. We're adding a D in terms of Greater Bay, which is ACED, differentiate. And that's going to be our message to the world. Bring your business here if you're a fintech or a bank, because you will differentiate with us. So,
Excellent.
So thank you, Professor, and good afternoon, everybody. Great to be back in UST. So to introduce a bit about my background, actually, I work for 2 credit bureaus in Hong Kong. So actually, to every consumer, the concept of credit bureau may not be that relevant for all of you, but actually, it affects every aspect of your life, because if you notice, when every day you apply for credit card, a mortgage loan, or a secure loan, a tax loan, in every single application form that you fulfill to the banks, there's a saying that you authorize your credit data to be passed from the bank to a credit reference agency for credit assessment, such a way that actually sometimes you may wonder why your credit card is got rejected and why you have got a better line assignment than your colleagues, even though you have similar income. So actually, the mechanism behind, there's a company called Credit Bureau Company who owns all the lending data by the banks and money lenders in Hong Kong, in order to work out a credit score to determine your credit worthiness. So that's the background where I'm from, because you may be wondering, what is Nova Credit? Actually, it's a second new credit bureau in Hong Kong, but our focus is doing the Greater Bay Area. So I think today is a good topic. Why? Because when the government is promoting the Greater Bay Area connectivity, because I start from the financial institution credit risk management angle, the immediate benefits to the Greater Bay Area comes from 2 aspects. Number one is individuals. The Greater Bay Area consists of 70 million individuals. So how does this connectivity would affect like me and you in daily lives? And the second thing is the micro SMEs. I believe many of you came from a banking or financial institution background, have a saying that the banks, you only can borrow money if you are rich. If you are poor, or you have no mortgage, you have no house, no factories, you can't borrow any money, and that's true. So I see that the Greater Bay Area integration would be beneficial to both SMEs and individuals in terms of access to finance, making a small credit. And I'll talk about it later, but this is the background where I'm from, and I would love to share with you guys more on this aspect. Yeah.
Thank you, Jonathan. Hayden.
Hi, everyone. It's a little bit of a background about myself. I'm a fintech lawyer. I advise many fintech companies, financial institutions such as payments company, blockchain startups and many companies that are very data intensive, that they are intending on building a very large data lake and doing lots of interesting analysis. So including companies such as credit bureaus, which I have also previously advised. So I think I guess just to pick up on a couple points that the professor alluded to, data privacy issues, and Jonathan also alluded to data sharing issues, and also use of data to derive benefits or disbenefits to the individual whom the data is belonging to. So just an observation that obviously I think you must have heard of the new saying that data is the new oil, or data is the new gold, depending on where you're from. It's very true that I think we're away from the age that data, it's an afterthought. I think companies these days, many times they burn through a lot of cash, especially startup, really just to accumulate a very large set of data where they can derive insights from. And it's very important that you get the regulatory compliance right up front, because you won't be able to unlock the value of the data if you do not take care of the upfront requirements. Then you'll be left with a legacy data set that has problems that require a lot of fixing, which might be not practical in terms of the law. It might be expensive. And obviously, and I guess us in Hong Kong, we're under the impression that we have pretty good laws. But then look at what happened to us recently with a certain company not disclosing a data leak, many months after the incident. And in some other jurisdictions where there are more recent laws, companies are required to make such disclosure with what we call mandatory breach notification, sometimes within 48 hours. So I think increasingly this notion about Hong Kong having superior laws and for example, a place like mainland China is falling behind might actually not be valid anymore. And data is a perfect example. In China, they have the most recent, well, not very recent, but I mean in the past year or two, the government has introduced the PRC cybersecurity law. It's a very comprehensive law that deals with much more than just personal data protection or privacy. It actually, I can say it's a comprehensive law regulating the IT industry. So a bit of surprising results. For example, when I advise some of these mainland technology players when they want to market entry into Hong Kong, as a beachhead to then go elsewhere in the world, they want to test their technology, test their business models in Hong Kong first. A lot of time a question comes up, which is, can I rely on my mainland infrastructure, databases, and service the app that is, the Hong Kong users, operating the app in Hong Kong? And I've got that question many times. So they often think, okay, Hong Kong has got great laws. So, what is the cross-border data transfer rules, especially in terms of personal data? The truth of the matter is, there is a provision in our PDPO, the privacy regime that we have in Hong Kong, but it's actually not in force yet. That means that you can actually, aside from the existing requirements, for data, what we call the DPP, like the data protection principles, there's actually no specific restrictions in terms of transferring data to a place outside of Hong Kong. And I'm talking about personal data. Whereas the difficulty, surprisingly to some of my clients, is that once that data is sent to China, there are actually stringent regulations in China. Well, not entirely, I might say not entirely motivated by just protecting personal data privacy, but nevertheless has the effect of introducing many hurdles, including things like in order to retransfer the data back to Hong Kong, which you can appreciate it. If you're operating an app, there will be constant back and forth the data, so the data transfer will be bidirectional. You have to do things, among other things, like a privacy impact assessment, security assessment, probably have to put in place some intra-group data transfer agreements. i.e. a much higher standard than what we have in Hong Kong these days. So I think, not only in terms of technology that we're really seeing a lot of Chinese entities thriving, I think there are probably increasingly some sophisticated rules and regulations in China as well, which to us in Hong Kong who are inclined to make a splash in the Greater Bay Area, we often have to we often overlook, and we should start paying attention, and perhaps including some of our regulators here in Hong Kong, that it's time to update some of these legislations that might be falling behind as well. So that's just a few observations that I have.
Very interesting sharing, Hayden. And particularly on this issue of transporter data flow, I think there will be a lot of things that we can discuss, because I remember the very first most famous law in this regime is the data protection, how do they call it? Data protection policy in Europe. GDPR is the latest one. The first one came out in 1995. The earlier one, where they have this data protection, transporter data protection restriction. And I remember back then it was a huge debate and discussion between European Union and United States. And eventually they came up with a beautiful solution called Safe Harbor, which basically says that you are trusted, so let's forget about the law. When we are into this kind of debate, I can imagine there will be a whole lot of problems that we would have to fix before you can actually facilitate this kind of transporter data protection and consumer protection. But let's hold on to that discussion. I would like to come back to the other two speakers first before I forget what they mentioned just now. And I would like to point the finger back to William now. You mentioned about adding the word D, and I like it a lot, differentiation. And I certainly think that in order for Hong Kong to move forward, to be a leader in fintech, we have to find out what is our edge. And in this case, if I were to ask you, where would you think would be the best source of differentiation that a company or maybe anybody like us in Hong Kong who will be able to achieve in the Greater Bay Area? From which aspect are we going to say we in Hong Kong are different from China, Zhuhai or some other cities, that we can actually add more value to the Greater Bay Area development of fintech?
That's a very good question. I think the strength of Hong Kong is the industry knowledge and industry capital. Okay, I mean, if you kind of look at this in terms of buckets or categorization of differentiation, you have knowledge capital. Okay, you have data capital in terms of having structured and unstructured data to support innovation. Okay, and then you have technology capital. Okay, the differentiation pillar that jumps to the forefront in my mind for Hong Kong is the industry capital. Okay, so the finance industry. Okay, the differentiation playing back to the region at a macro and micro level, in my view, is you can look at the Greater Bay region, specifically Hong Kong and Shenzhen, in terms of what most enterprises face internally in terms of challenges. Hong Kong is fintech, business and industry knowledge and software and application to a certain degree. Shenzhen is hardware and tech. Okay, we need to bring these two communities together to solve the challenges, to grow as a region. Because right now across the border, there's more focus on the technology, the hardware, and the platform versus the industry application, which is going on here. At a micro level, to what both of my colleagues said on the panel, for differentiation, you need to have the secure data exchange across the region, and regulatory needs to contribute to that. You know, speaking from firsthand experience from IBM and also now at Huawei, we have a China financial services strategy and a cloud strategy for Chinese customers. We have 4 public clouds in China for Chinese customers only, but that's not commingled outside China. We have public clouds through telco partners outside China. And we have plans to expand, but what that's going to look like in terms of secure data exchange across the regions is still to be determined largely from regulatory input and law input too. Technology's there to make it happen. It's just a regulator portion that needs to evolve further. So,
I see where you are coming from, and I largely understand what you think would be the best edge that we have. But I'm kind of puzzled. Let's say if I'm just an individual working in a bank or maybe a financial institution, maybe not even a financial institution, what can I do? You mentioned about China having a lot of hardware and data, cloud server, and certainly coming from Huawei, or we have probably have some audience from some of the financial institutions, maybe Ant Financial whatsoever, that are getting hold of a lot of data and knowledge, so-called, that they can generate from these data. So we from Hong Kong, I don't really represent the whole industry. I'm only just working in a company. What can I do to make sure that my value can be lifted in this Greater Bay Area regime of fintech?
I would say immerse yourself in what the large China financial institutions are doing. Okay, Jonathan's area, social credit, is becoming more and more prevalent. Okay, everything is tied in terms of your activity on your phone, and that's factoring into what credit you're going to get. And even if you can take a flight outside the country, if you're doing bad things within China, you may get blocked from going on a plane. I mean, but there's good aspects to all of that in terms of the learnings, okay, on data management and security. So there's a negative side or a perception negative side, but there's a very, very positive side to that too, in terms of data management, okay, and integration.
That sounds a little passive, isn't it? When you say, why don't you just follow what these Chinese companies are doing, look at what they're doing and see what we can learn or what we can do. That doesn't sound like a differentiator.
Well, I mean, also, from a differentiation perspective too, which is prevalent throughout the industry, payments, okay, is a way that the disruptors are disrupting the industry, as an example. Yes. So if you, back to my point about following or seeing what the Chinese companies have done, Alipay, yes, Open Sesame, the door into the Ant financial system is through Alipay. Mm-hmm. So payments is unlocking the entire ecosystem. The chair of our committee, Simon Long from WeBank, okay, is expanding outside China into Hong Kong and Southeast Asia through Interlock, through Tencent and Alipay and the Ant financial system. So there's integration in terms of the ecosystem. So there's leveraging those data controls, that data management, and from platform strategies, piggybacking off a pre-existing platform that's built and locked down already to scale.
Yeah. Jonathan, would you agree, given that you come from a creditorial background, you guys are probably the persons who are handling the most sensitive things?
Actually, I have two. Professor raised a good question. I think 2 points to contribute here. Back to his earlier question about what is our role in this fintech landscape development. Actually, in early September, I was with the Hong Kong government visiting to Israel, visiting a lot of fintech companies. And after this inspiring trip, I can see that Hong Kong people in general do have a unique edge in this fintech development. Why? Different from mainland China is that Hong Kong as an international financial center, we have accumulated a wealth of experience, domain knowledge in finance, in fraud, in credit risk. All these areas we call domain knowledge is extremely invaluable. Why I'm saying this is, in Israel, I see a lot of good startups with good ideas, a lot of good capital inflow, but they need a lot of use cases. I see that Hong Kong, the unique role of Hong Kong in this fintech development is we help to land those great ideas to address last mile challenges, last mile problems. For instance, since I came back from Israel, there are many like credit risk or fraud risk, like AI companies wanted to, hey, Hong Kong has so many experience, so many great cases in fraud. Why don't you help us to land in Hong Kong so that we can help you guys solve your problem? So back to the earlier question is that I think due to the unique genes of Hong Kong people as a diligent, hardworking, and on time and efficient, we are amongst the other economies of the world, we are extremely good at being a last mile problem solver to really hit the problem right there. So this is the first. I would say this is the first advantage of Hong Kong. And then go back to the second point regarding data management. Since I've worked with a lot of data companies in China and also because our regulators in China is the PBOC and the Guangdong government. And through the process, I can see that they respect Hong Kong people a lot in terms of our work ethics. Give an example. We are trying to build a scorecard for SME, for some like micro lenders, for some money lenders in China. Well, they have a user habit. They use the phone to take a snapshot of the Excel sheet full of the customer data and transfer to you, saying that, do you think this is just is daily conversation asking, oh, is this kind of data file good for you? And I say, oh, please don't send me any personal data on phone. We need to establish a process so that you have a user guide on how you handle data deletion, data transfer, and if you don't have, I have my own manual for you so that I help you guys put in place this kind of framework before you guys sending any data to it for analytics. And I see this kind of conversation happening in different levels, like with the government, because we work with government as well, and with money lenders, with industry associations in the Guangdong province. I see that, especially in this Greater Bay Area development, Hong Kong people do have a strong work ethics that we are very sensitive about what we are getting, and we are not only taking a passive role, but we also, I see that we have another role is we advise our counterparts what you need to be aware of when you are handling this data.
I would like to pick up on this point though. I understand fully what you mentioned about our strength here, and that is we have experience, we know what is going on, we have the big picture, and we also are more sensitive towards the process, the consequences that these processes can cause us. But if I look at the flip side of it, wouldn't that then become our burden? Think about what people are doing in China. This is my personal opinion, but I'm pretty sure part of it is true, and that is in China, the reason why there can be so many innovative solutions is largely because of the fact that you can easily experiment over there. If you really want to try to add value to the data, I send the data out first and see what other people can think of it out of the data. This is impossible in Hong Kong. And if I want my colleague to collaborate with me, I'll just send him a snapshot of my data, and then my colleague will be able to generate some innovative solution. This is not doable in Hong Kong because of the data privacy law. Now, if you think about it, all of these so-called historical experience and knowledge, to a certain extent, becomes a burden that is pulling our leg also. And is this really an edge, per se, in that sense?
Just two small remarks. It's a great question. So I think that's where the Greater Bay Area comes in. Again, taking my experience in Israel, Israel is a country with a population of 80 million only, but they have the world's largest number of fintech startups. And there's one thing impressed me a lot in their keynote speech is that the Israeli startups, they think global right at the moment when they found their company. So Israel has a very small market, but when the very moment they create a company, they look at global. They look at the world map as their whole market. So if I put this concept into place, Hong Kong, even though we have got 7 million, is a small market. But if we look at the Greater Bay Area as a whole market, it's 10 times more. So I personally feel that this is an area that we can capitalize on. And back to another point regarding data privacy. Actually, we have the section 33 of the PCPD saying that actually there are 6 conditions allowing personal data transfer. So, but anyway, I think this is the subject matter of Hayden, so I leave it to him anyway. But I see that we do have the data privacy law in Hong Kong do not 100% stop us from transferring data, because one of the principles saying that if you have explicit consent, you are allowed to send data anywhere. This is the section 33 of the data PCPD says that. And the second point about the whitelist country is that there's a saying that if that whitelist jurisdiction has substantially similar practice of law similar to PCPD in Hong Kong, this should be okay. So of course, I'm not an expert in this law area, but I feel that these legal challenges do not stop us from achieving more and utilizing the potential of the GBA.
From the law perspective, maybe not. And in fact, I can even give you an easier loophole of the PCPD, and that is just remove the personal name. Just remove all the personal data, and then you won't be covered by the law.
That is only true if you cannot repatriate it down
if you cannot regenerate the identity. But there are always some ambiguity when you interpret these things. But anyway, so let's go back to Hayden. Given we have already discussed quite a bit about the role of data and also innovation in the Greater Bay Area. From your experience, especially when you mentioned you have advised so many clients related to the development of FinTech, what do you see as the major issue in Hong Kong when we try to develop these FinTech solutions? Maybe from a regulation perspective, maybe from a legal perspective.
Before I address the issue, maybe I'll pick up on the point of what our advantages from my point of view might be as well, because I think it's good to look at not just the issues but the opportunity as well. I think a couple of things, right? I think China, and like other panelists have said, they have been great in coming up with these so-called last mile solutions, and they've thrived on what's called leapfrogging, as in they've skipped a few generations and they go right to the problem, right? So for example, in the payment space, Alibaba, WeChat Wallet, these two players, they in many cases they're approaching the unbanked who never had a bank account before, who never really have a credit card, which is really not common in China, and they've come up with a solution that is very handy, and I think. While that is great, and obviously both of these companies have aspirations to grow internationally, I think that's where people in Hong Kong can come in that we are in a very mature financial jurisdictions, and that, there isn't really such a leapfrogging that you can do, in a lot of these mature jurisdictions, because they do have incumbent players, they do have existing payment mechanisms that are very prevalent already. So I think that's, so for us in Hong Kong, while we have a good understanding of what's going on in China, we also, like Jonathan have said, we've got great domain knowledge, and we in the use cases, basically we are living the life of a very mature financial jurisdiction. So if a technology can work in Hong Kong, it has a much better chance of succeeding. A Chinese technology has a much better chance of succeeding internationally if they can make it work in Hong Kong. And that's, I think, for that reason, a lot of times, and I think it's a trend that in the earlier days of my practice, I've been advising a lot of inbound investments, inbound things, international clients wanting to set up in China. I increasingly, and I would say probably more than 50% of my work has been advising Chinese technology companies, to some extent, doing outbound investments, sometimes via Hong Kong as the investing vehicle, but sometimes via Hong Kong as the testing ground for their technology, for the use cases. So I think that's clearly an area that we are that we can thrive on. And to a certain extent, and we'll address the legal part. And you ask the problem, well, is the law holding us back? But I think, in China, they have other problems as well. I mean, where we have legal risks, they have policy risks, lots of policy risks. So a lot of I think in about September 2017, I was about to hop on a plane to go to Beijing to go to this blockchain summit. And a few days later, there's this circular from the PRC government putting a categorical ban on this category of activities. So the conference, instead of being held in Beijing, all of a sudden it became it was held at the Grand Hyatt in Wan Chai. So I didn't have to fly. So I just have to go to Wan Chai, and I had I couldn't actually get back into the main hall because everybody was pulling me out in the corridor. Can you help me set up in Hong Kong? I can't do it in China anymore. So I think I think it's fair game. I mean, whereas I think in Hong Kong we do have a lot of laws, a very good legal system, but I think we also have more of a laissez-faire, more of a market-driven approach to things, which will be very conducive to coming up with a lot of these sort of, especially decentralized technologies, because that's one thing that the Chinese government is quite wary of, that they do not, they still like to keep a tight rein over these sort of technologies. So I think there are opportunities and there are challenges. But if you ask me, in Hong Kong, I think increasingly, I do not really think Hong Kong law it's what's holding us back. I think Hong Kong law typically it's quite balanced in terms of we cited the example of Section 33 of the PDPO. It's actually not enforced yet, so it just has a draft status. But my advice for the client would be always to get future-proof your operations and really to put in, and it really practically means that to get the user consent. Whitelisting probably won't work at this stage because the Privacy Commissioner hasn't released list of whitelist countries yet. And rumor has it why Section 33 is not yet enforced is because back in the old days, when they wanted to draft the whitelist countries, they realized that they might have to name China as one of those countries that have inferior privacy laws, so that become a huge political problem, so hence stuck. So, but that might not be the same these days, because with the advent of the PRC cybersecurity law, it's purely a speculation. There might be perfect grounds for the Privacy Commissioner to now put in the motion of, sanctioning Section 33.
In that regard, let me raise another common, well, I wouldn't say common, but raise another major practice in the United States right now, which is, in fact, we mentioned about breach disclosure just now. And in the United States, they do have breach disclosure law, but this is enacted on a separate, regime.
Yeah.
They don't really have a umbrella privacy law like Hong Kong or European Union. And it seems like it's working pretty well, isn't it? There are things that we have a privacy law in Hong Kong, but we are not, imposing. In the United States, there is no privacy law, but they are actually protecting certain aspects of the privacy in the society and data protection. So if we apply this two system into the Greater Bay Area, wouldn't that mean maybe for the Greater Bay Area, which involves Hong Kong, China, and some of the other cities that have a different kind of system and autonomy, wouldn't this kind of more flexible regime would provide for a better room for development?
Well, I think it's actually a very complex issue. I mean, while Hong Kong doesn't have it doesn't have restrictions on cross-border data transfer, it has the toughest direct marketing rules in the world. So in the old days, you would identify the country with, what we call like a high watermark approach, the toughest law. If we comply to that, then we're okay across the board. But that's no longer true because there isn't really, something called Asian law or global law. I mean, each jurisdiction has its own laws and regulations, and it differs. And even within the European Union, with GDPR, they're still not perfectly normalized. I mean, there's still, different approaches in different countries within the EEA. So I think I don't think regulators like the notion of that the implementation or the enforcement of law would be more flexible, because I think the law once fully once you go through the consultation process, it's been fully debated, it's meant to be followed. I do think that law always fall behind technology, and I think it's such a data intensive world that our data laws don't quite catch up. I do feel that we need to catch up. And there are certain elements, Jonathan mentioned that just get the consent, you can fix all the issues. It's probably true for Hong Kong. Do you guys ever read the privacy policy before giving a consent? Practically, right? I mean, if you want to download something or use something, you click agree to everything. So I think for that reason, for example, GDPR has introduced a new concept called legitimate purpose, that it's perhaps not as sufficient because the regulator knows you click yes to everything if you really want that app or if you really want to do something online. So, I mean, whether that holds back businesses, perhaps, but I mean, you always have to strike a balance because, you wouldn't want the end result of having the broader consumer base really worry about, having the data exploited and then start using these great technologies. So I think really it's a matter of balance, and I think it might add to the compliance costs, but I would categorize that cost as just, a cost of doing business or perhaps a cost of being in a civilized community or society. So, and I think honestly, not only that there needs to be rules, there need to be we need laws with teeth. I think a lot of reasons why GDPR is so feared. It's because of its sanction that now it's in terms of global turnover, perhaps up to up to antitrust law levels. Or, you can go up to 2-3% of your global turnover. Then everybody, and it has extraterrestrial jurisdictions that even a lot of my Chinese clients started to get really worried. And when I remind them, did you know you've actually got in your home court, you've got the PRC cybersecurity law? Oh, never mind that. I really need to worry about the European laws, even though I'm in China. Why, right? I mean, because there isn't really sanctions, right? So if you look at our PDPO, you're looking at maybe like 6-digit fines at most, right?
Yes.
And you're looking at not a lot of criminal sanctions. You're looking at, you're looking at with the old commissioner a name and shame sort of regime that they will publish your name on newspaper and publicly reprimand you. But if you don't care, you don't care, right? So
So is the advice here, let's not care?
No. The advice here is I really think that Hong Kong is behind, and the only consequence would be that we will have a refresh of our laws. So I think we need to comply. We need to come up with a compliance strategy. We need to future-proof our business because, I mean, grandfathering provisions, it's always a very difficult topic, but it would be no use to any business if they are sitting on a huge set of data, legacy data, that they need to perhaps fix, they have to cure, they have to get additional consents or other sort of hurdles to clear before they can make use or derive benefits from that data. And at that point, it often becomes very impractical and like if you have to ask a consumer to give you what we call in Hong Kong prescribed consent for something that is very onerous, and without any upfront incentive, it's quite unlikely that any consumer will give that sort of consent. I mean, they've already downloaded that app, they've got what they needed, so the other thing with consent is it can always be withdrawn, and then you've got these other deletion or retention responsibilities as well. So I think certainly as a lawyer, my advice would never be don't care. You should care. I think increasingly you care not just because of your operations in Hong Kong. It's because your technology business will likely have a global reach, and you should care not just about Hong Kong laws, but how you come up with a realistic, risk-based approach, driven compliance strategy that will allow you to do business in Hong Kong, in the Greater Bay Area, and perhaps globally.
Excellent. So it seems like I like the word risk-based approach. This sounds exactly just like what the accountants has been talking all along. Everything has to be risk-based, and I'm happy that the lawyers and the accountants are now saying the same thing.
Well, those are the words of the Privacy Commissioner.
And the privacy, okay. I'm going to ask the same question to the other two panelists. So, William, what would be your advice, given your experience in Greater Bay Area, in terms of fintech development? If you were to give a general advice to people in Hong Kong, if you want to really develop a space in Greater Bay Area for ourselves, what would you think we should really do now?
Continue to look for opportunities to collaborate across border. Okay.
Collaborate across border.
Yeah, exactly. That's one of our objectives I mentioned earlier in my introduction. We're looking at where are the specific pockets of collaboration or initiatives in fintech that are spanning cross-border from an interest, investment, academic, research perspective.
Okay.
So blockchain obviously is one. I mean, at the corporate level, there's I mentioned the trade finance solution, okay, that's cross-border.
Right.
So, look for these pockets of opportunity in specific fintech areas to cultivate that are cross-border. Okay, from a people perspective, process and technology.
Talking about trade finance, ironically, I knew that Hong Kong MA has just worked with some of the banks in Hong Kong to launch a trade finance blockchain solution. Mm-hmm. And I thought that one is not cross-border, but maybe...
That actually, I advise on.
You advise that one, yeah.
It is, initially it's not cross-border, but the MA has since entered into MOU with Shenzhen and Singapore. So once ready, there hopefully will be a cross-border element to it.
All right.
The other piece is, which we didn't talk too much about in terms of differentiation between China and Hong Kong, is the industry business model lines are blurring more so in China. I could go back to Tencent and Ant Financial and Ali. I mean, they started as, e-commerce platforms and social interaction with Tencent and WeChat, but now they're doing finance. Finance is becoming invisible through fintech in China. Is that the case in Hong Kong entirely? Not so. There's still lines of demarcation here.
Okay.
So,
Thank you. And Jonathan.
Actually, William has said most of the things I came across. So, but I would say as a young graduate, not so young anymore, of UST, from the perspective of future talent development, I think Hong Kong, I would say the booming of investment banking was gone already. But I want to say that
I'm not sure the audience would agree, but
yeah,
never
but
mind.
that's why
Never mind. Let's go on.
I want to say that for the new generation, I hope that they could. This is the great moment. I think this fintech wave will be lasting for 10, 20 years, and I see that for the young alumni, even though maybe you have not engaged in a fintech startup, or you may, but you have to equip yourself to prepare this wave. Because, for example, AI, things like AI, for example, in my area, like credit risk modeling, the AI tools has came to a stage that you can replace credit risk modeler by tools already. So you can build credit scorecard in 2-3 days through automation. Like in the past, a credit risk analytics, like salary is very high and the market demand is strong. However, I can see that this fintech trend is kind of disrupting the market, and get prepared, learn coding, and Python is very important, because especially when you are in a startup, like inevitably, you will be engaged in a data business. For example, no matter you are in Uber, in Grab, or Airbnb, or Tencent, whatever types of fintech startup, you have to deal with data. So get prepared do some coding, so that even though you are a boss, or you are a VC or an investor, you know what company you are investing in, you know what company you are getting into, and also be more sensitive, or read more about GDPR, because the punishment could get you up to the global level of global revenue of 3%. Yeah,
4%.
which is crazy. So learn Python and GDPR.
I'm very happy that you are advocating this, because in the programs that we are organizing in our school, pretty much all of them now has a Python and AI and data analytic element. And in fact, our business school are planning to make Python programming and data analytic a must-take for everybody in the future. So this
I
is
guarantee it's I took that course last year in the master's degree, so 100%, yeah, I love it.
Thank you, Jonathan.
Strongly recommended.
Before all the audience here leave, let me just make sure that we are giving them some time for any questions. So may I invite question from the audience? Yes.
I'd like to follow up on a couple of things. One, you mentioned the HKMA blockchain trade finance platform. So essentially, 6-7 banks have been invited to build this platform, and of course now collaboration with perhaps Singapore would happen to make it cross-border. There hasn't been any participation from young startups. So when you talked about opportunity, where is the opportunity here for young startups?
Good question.
Young startups in this space can help solve, in our point of view at Huawei, and I'm part of our steering committee in our blockchain solution. For blockchain to reach critical mass, it really needs to solve 4 or 5 key architectural principles. Performance and scalability being one, interoperability and programmability being the second. usability. So just because the 12 or 13 banks has come up with this for trade finance, is it covering all possible use case scenarios in that realm, as an example, okay? Off-chain and on-chain processing, so public chain and private chain, the integration between the two. The banks that are collaborating cross-border in terms of trade finance may be public chain processing, but what about behind their data center walls in terms of those transactions that have to reach into their enterprises for reconciliation? These are just some examples. So startups can help contribute to this to solve the inherent challenges of the technology for mass scale and adoption. You know, the 13 banks don't have everything figured out. Well, it takes
we
work.
actually had a dialogue.
Yeah.
We had a brief dialogue with the HKMA.
Yeah. Well,
to allow
yep, sure.
for startups to become a part of this process so that we can give our inputs.
Yeah. The answer there, though, too, is a lot of the critical mass and adoption and acceleration is going through the consortiums. So this solution is based on Hyperledger Fabric protocol. Okay, the challenge I see with a lot of the startups, they're not following Ethereum protocol, they're not following Hyperledger, they're not following the no offense, but you're facing a bigger challenge. Okay, and this is what China, which has the most blockchain patents in the world, is trying to conquer. Standardization. There can't be 700 variations of blockchain protocols. We all want to conquer the world. We all want to get to Internet 3.0, but we got to work with common open standards.
That's true. So Hyperledger is open source. Hyperledger has got nothing to do with 6-7 banks.
Yeah, but they're investing in it, and a lot of them have started those.
So they're collaborating. So even startups are collaborating equally with Hyperledger.
Yeah. So that's
if
the
I
way
were
in.
to if I were to step into this discussion, I guess the issue here seems to be that the startups may be frustrated because the maybe the government, maybe the big consortiums, when they are coordinating to create these new innovations, apparently there is not enough involvement of the startup companies into these developments. But the problem, from what I see here, is that in this panel, we don't really have someone who can speak for HKMA. so maybe even if William were trying his best to answer this question, I suspect he will never give you a satisfactory answer. So with that, maybe we can take this offline and we could go to the next question.
Hi, I'm Charles with Invest Hong Kong. I just wanted to thank the panel for this amazing discussion, and I think that there's a lot of opportunities. And I'd like to address the question from the lady here. Actually, there's a number of people, including the Fintech Association of Hong Kong, which has specific groups on blockchain. And if you're interested, anybody who's interested in participating in this, in regards to not only participating, but actually in active discussion with solutions, we'd be more than happy to put you in touch with the right people at the HKMA. They have a chief fintech officer, and also the various groups. We're all working together. What we want to do is to really build Hong Kong into a unique ecosystem, second to none. So we welcome your participation, and we'd like to work with the universities, the players, as well as the other parts of government and the community to make it happen.
Actually, to add on to the frustration, not even startups, sometimes the universities' voices are also not heard.
Well,
in the interest of time, maybe we can take...
Maybe I'll jump onto that as well, because personally and professionally, I'm actually involved in a lot of blockchain and cryptocurrency projects. So there are, I think Hong Kong is becoming one of the hub of ICOs and increasingly, hopefully STOs projects. So it's true that a trade finance platform is probably not what you might get yourself involved in when you're 25, you're out, graduated from engineering school, and you have a very big idea. So I don't think we should look at how the HKTFP it's essentially a contract between one technology vendor and HKICL, the Interbank Clearance Limited. Invariably, it's going to be a very sort of top-down, sort of government-led initiative. But I think the hallmark of the cryptocurrency movement is that it's very community-driven. And in Hong Kong these days, I'm sure you can find a meetup to go to if you want to. You can get yourself very busy until like 11 p.m. every night. There's always an event. There's always a meetup. There's always an ICO or 2-3, conflicting events. And we're having the FinTech Week coming up, so I'm sure the activities will be, will quadruple. You probably have to go to 4 or 5 events, in the evening if you want to, address all your interests. So I would disagree that there isn't, a way that startups can meaningfully participate in Hong Kong. It's just that with the crypto community, it's happening in a very community-driven sort of a way, and actually it's very vibrant. I mean, I have to stop going to these things in order to prevent a family crisis.
Indeed.
And I think it was a good decision on my part. Otherwise, I have to look at a divorce at some point. But there's just so many things that you can go to every evening.
I think now there is like one blockchain summit every month, and there are
Exactly.
too many summits now.
So
in the world.
I would argue that Hong Kong is just as good a destination for anywhere else in the world for this sort of thing.
Okay, I guess we can take one last question. Yes.
It's Jasper. Thank you very much for your sharing and perspective. It's very interesting. And we touch a lot about the data issue with respect to Hong Kong versus China in today's discussion. One thing that I would suspect would be a challenge going forward for Greater Bay Area is the capital control in terms of free flow of capital. And I guess my question is really to try to understand from your observation and your perspectives, how are these capital control across the board being changing now and forward looking? Thank you.
So I think that is the primary reason why I still believe Hong Kong primes fintech development in GBA, because we have a free capital outflow. For example, virtual banks, I heard from a lot of market feedback, like in the assessment of the virtual banks, one of the consideration is about the ownership structure, capital injection plan. Some of these big names even fail because they've got problems of getting guarantee or like confirmation from their shareholders, but this is not non-official. I'm not speaking on behalf of HKMA or any virtual banks, but I knew that like because of this capital control, this creates an excellent opportunity for local virtual banks, brands in Hong Kong to thrive. And I'm personally looking forward to that. So I think because of this, it gives still Hong Kong enough chances to thrive, especially because we have the GBA. I want to stress that our market is not only in Hong Kong, not only 7 million people, but 10 times more. So especially when the inflow of capital from Hong Kong to everywhere is free, I think this is one of the, I don't want to say last chance, but unique chance that we can capitalize on.
I totally agree with Jonathan. I might actually, if I were to guess, I think the outlook for mainland China is perhaps more pessimistic. With the current trade war, and we've heard about the MIC 2025, Made in China 2025, advanced information technology would be one of these 10 categories, industries that they would focus on, which means they would probably impose some sort of foreign ownership restrictions. So it's not just, and also, other direct subsidies, and state-owned companies might have, do things differently. They might procure from a local player rather than an international player. So I think, yes, it's probably an advantage for Hong Kong. And I don't, unless the trend changes, I don't really see the sort of capital control sort of measures easing up. I mean, it's a huge problem for Chinese investors going to the United States right now. We have CFIUS, we have all sorts of, hurdles. And likewise, while the Chinese government still want to usher in investments, it often comes with these sort of joint venture rules or what have you that, among other things, might sort of directly and indirectly, force these foreign companies to transfer their valuable IP. So there are a lot of problems, actually. So I think perhaps that's an opportunity for Hong Kong, but I don't really see things going any easier in China right now in terms of investments, in terms of inflow and outflow capital, etc.
Okay, I think with that, it's time for us to close the panel. Thank you very much.
Yeah, thank you. So on behalf of HKUST Business School and Fintech Association, we want to thank again Invest Hong Kong to sponsor today's event as part of the Hong Kong Fintech Education Week. I'm sure we all have a lot of takeaways. So before we end, I would like to invite Professor Veronique, our Executive Director, Korean Corporate Outreach and Associate Professor of Business Education of HKUST Business School, to come forward and present a souvenir and take a picture with our great panelists today.